Tonight, disgraced crypto entrepreneur Sam Bankman Fried released from federal custody, wearing an ankle monitor.
This month, federal prosecutors seized nearly $700 million in assets from FTX founder Sam Bankman Fried, largely in the form of Robinhood stock. The Department of Justice revealed the seizure of Robinhood shares, including cash held at various banks and assets deposited at the crypto exchange Binance. Before we dive into the video, make sure to like the video and subscribe to my channel for more amazing updates. The ownership of the seized Robinhood shares of about $525 million has been the subject of disputes between Bankman Fried, FTX, and bankrupt crypto lender BlockFi. The most recent asset seizure occurred on Thursday when prosecutors seized $94.5 million in cash from an account at Silvergate Bank. The account was associated with FTX Digital Markets. More than $7 million was seized from other Silvergate accounts associated with Bankman Fried and FTX. The DOJ also seized nearly $50 million from an FTX Digital Markets account at Moonstone Bank, which is a small bank in Washington state. The DOJ said that assets in 3 Binance accounts associated with Fried were subject to a criminal penalty but did not provide an estimate of the value in those accounts. But who is Sam Bankman Fried, and where it all started? Sam Bankman Fried was born in California on March 6, 1992, to 2 professors at Stanford Law School. Fried grew up in a highly educated family and attended high school at Crystal Springs Upland School in Hillsborough, California. Fried graduated from MIT in 2014 with a degree in physics and a minor in mathematics. In the summer of 2013, he worked as an intern for New York-based Jane Street Capital and returned to the proprietary trading firm as a full-time employee after graduating. In 2017, he left Jane Street and founded Alameda Research, a quantitative trading firm making millions of dollars daily by actively trading cryptocurrency among various international markets. Fried founded the cryptocurrency exchange FTX in April 2019 and launched it the next month. Fried's company thrived as the cryptocurrency world burst into prominence during the COVID-19 pandemic. FTX acquired the Blockfolio exchange and platform for $150 million in 2020. FTX's user base expanded, and Fried appeared to be on a solid foundation in the turbulent cryptocurrency markets. During a wave of crypto failures, Fried offered a financial lifeline to cryptocurrency exchange BlockFi, saving it from a major liquidity crisis. Fried rose to prominence as head of one of the world's largest cryptocurrency exchanges, with a personal net worth once exceeding $26 billion. But on November 2, 2022, a report found that much of the cash held by FTX was in the form of its own token, FTT, which it centrally controls, and on November 11, Fried resigned from FTX, and the company filed for Chapter 11 bankruptcy. The failure of FTX shook the volatile crypto market, which fell below a $1 trillion valuation and lost billions at the time. Fried was extradited on December 21 from the Bahamas, where he lived in a multi-million-dollar mansion. Before his arrest last month, Fried insisted in numerous interviews that he did not know about any improper use of funds from FTX customers, saying that he has just one ATM card and $100,000 left in his bank account.
This is one of the biggest financial frauds in American history.
Fried was arrested but released on December 22 from federal custody after his attorneys and federal prosecutors agreed to a $250 million bond, the largest in history. But the former crypto executive will live with his Stanford law professor parents in Palo Alto, California, be confined to the Northern California area, wear an electronic monitoring bracelet, and submit to mental health and substance abuse counseling as part of the agreement between federal prosecutors and a federal judge in New York. Meanwhile, former associates Caroline Ellison and FTX co-founder Gary Wang pleaded guilty to fraud and are cooperating with federal prosecutors. Fried has been charged with 8 counts of fraud and conspiracy. Federal prosecutors have alleged that he orchestrated one of the biggest financial frauds in American history, doing so by steering billions in FTX customer and investor money and funneling it to his privately controlled hedge fund Alameda Research. Other funds were used to make tens of millions in political donations and to buy lavish real estate. Fried is also facing accusations from the Commodity Futures Trading Commission that include manipulating the price of his exchange's FTT token and front-running customers. Once viewed as a white knight in the cryptocurrency community, Fried's reputation has quickly shifted to villain status thanks to prior bailouts and rescue deals for other crypto companies. FTX began 2022, valued at $32 billion, but Fried ended the year getting arrested for defrauding investors. After the financial collapse of FTX became a clear possibility, Fried reportedly attempted to raise billions of dollars in an overnight deal to rescue FTX. But with no suitors willing to hand over $9.4 billion to save FTX, he filed for bankruptcy and resigned as CEO. The following day, about $1 billion to $2 billion in FTX customer funds went missing. FTX stated that it was investigating unauthorized transactions after blockchain watchers spotted hundreds of millions of dollars moved out of FTX cryptocurrency wallets. In an interview with Andrew Ross Sorkin on November 30, Fried said that FTX's collapse stemmed from sloppy accounting and a market crash but not from criminal activity. What do you think? Let me know in the comments section below. Don't forget to like the video and subscribe to my channel for more amazing content. Until next time.